Okay. I've had to upload all the CQG charts off another laptop. So there's no settings at all on these charts. So we're literally going to start naked and then build some charts. We'll build my charts, and I can show you how my charts are configured. And then we'll go from there, and we'll talk about what February has taught us, what we should expect going into this month. Was that move up in euro dollar? Was it a corrective pattern? Was it an impulsive pattern? Obviously, at the moment, it's looking pretty bearish. We had quite a good morning at PIA or first trading this morning. I think about 95% hit ratio on our calls today. There's some decent trends, decent moves. So we've basically got in front of us, we've got a basic euro dollar chart. Okay, candlestick chart. It's a daily at the moment. Just going to get rid of that in the top right hand corner. Okay, my settings are Ishimoku. Basic Ishimoku cloud settings. I don't make any adjustments. And this could be fun games because this could be somebody else's settings here. This is a basic moving average, which I'm going to modify. I use a 15 EMA, which is an exponential moving average for those of you that don't know. I don't have it offset at all. Okay, and that's my main trend indicator on most of my charts. Take another moving average on. This time I'm going to modify it again. This one's going to be a 62 EMA. Okay, and then we want an RSI in the bottom. Studies. Like I said, this isn't my normal PC, so I've got no settings on here at all at the moment. Okay, and then I've got an RSI on the bottom. I adjust this RSI as well. I don't have 13 or 16 setting. I actually have it at 15 again. And that is it. That's all I use. I know that the cloud can make the chart look quite complicated, but as long as you've got your moving averages in sort of high definition, and then your cloud in the background, just giving you some confirmation. Actually, out of euro dollar now, just wary of this support coming in here about 131.18. It was a decent break to the upside, so you can see that we moved in to this cloud formation, gyrated a little bit around inside, okay, spiked off the base, and then rejected again the top side. So we've got rejection here, pullback. Then we mess around in between the two EMAs. The reason why I use these EMAs is because I'm quite fanatical about Fibonacci levels. So obviously 61.8% being the golden ratio. If I need to put this cursor on, don't I? 62 EMA is as close to 61.8% as you can get, and obviously as I break it down through the time frames, 61.8% or the 62 EMA becomes 15 EMA. So I use this 15 EMA as a close setting, okay, to keep me in my trend. I'm looking to sell off this EMA, and then I'm looking at my 62 EMA, just confirmation of a longer trend, and breaking it down into shorter time frames. So you'll see when we get down to put the hourly charts, 4 hourly charts, 15 minutes, or even 5 minute charts, how these two EMAs can keep you quite nicely in the trend. The RSI isn't used for overbought or oversold levels. The RSI is purely used again to keep us in the trend, to keep us in the bias. I would normally say that if it's in between the EMAs, I'm not talking about a daily time frame which we're looking at the moment. Excuse me. in Coleman. I'm doing a webinar. Okay, bye. That is rude, that's my wife. So while it's in between the EMAs, I consider it to be not non-trending, but I'm wary of the bias. Okay, the RSI is above and we're above these 15s, the 15 EMA. Then a lot of the time, as you can see, it'll just come back and just keep on clipping it as support, and then bounce off. If it does push through, the next support that I'll normally look for is the RSI pushing down to the 50 line. Okay, so this 50 line, as I said here, you can see how it did quite well, move back up, clipped the 50 RSI here while it made this move up, and then it opened and basically tanked down. This then got us into this sort of, I wouldn't say non-trending area because it's obviously trending higher, but in the dailies this is sort of my danger zone, if you like. When I'm out of these areas, so if I'm below the RSI, if I'm below the EMAs, if I've got bearish engulfing patterns, and the trend, highs are being rejected, then I'm looking to sell into it. I am not an analyst or a trader who tries to pick tops and bottoms. I'm very wary of Fibonacci levels for projection targets and for potential tops and bottoms. But until I get confirmation that that trend's actually turning around, I don't jump on board basically. So let's break these down. Let's do it onto a higher time frame. Okay, the quarterly is not obviously hasn't finished yet, but we can see here that the bias is still to the upside. Now, to me, I still think this is a very large channel. So I'm actually long-term bullish. Let's just get that study up. This is horrible, by the way. I feel like I'm coming in. Okay, he's not going to let me do it. Let me set the channel up. Even the charts aren't working now, which is great. We're going to have to use imaginary lines unless I can get a trend in here. Not too bad. Okay, so this is what I think's happened. We've basically got a move up in a quite impulsive manner, and then we've consolidated. On these quarterly, inside this quarterly channel, if you like. There is no bias really at the moment. We've got a lower low, and lower high, which obviously gives us bias to the downside. But we haven't made another lower high. The moving averages are trending up. This is around 50, okay, which is basically dictating that there really is no bias. We're in between the moving averages. We're above cloud formation, so a slight bullish bias as far as quarterly is concerned. Okay, monthly. Here's a little bit of a different picture. We've got a decent spike down. Okay, I think it was around 78.6%. So we've got this three-wave pattern up. Okay, move back to the downside. Okay, in between 60 and 71.8. In between 60 and 70%. So a decent area for a pullback. Most important factor in euro dollar, as far as I'm concerned, is this formation down the bottom here. Okay, so we had 1, 2, 3, 4, 5. I'm not worried about the crossovers. Okay, I'm not an Elliott wave fanatic. So we had 5-wave pattern lower, which is impulsive, and then we've started to move up. This pattern down the bottom here is a morning star formation. So a decent reversal pattern at a low after a 5-wave sequence. as I said, we've moved back up, got an inside bar now. An inside weekly bar is normally a sign of investor indecision. It's not a sign or a signal to sell. Okay, and then we'll get back to the daily. So what I think we have here, remember I was selling it this morning, so I'm not just an out and out bear. I flow with the market, if you like. Let's put a channel on this. We need to get this channel. So we've got this here. I'm going to blow this up a little bit in a minute. We'll just take it off the base here. So we've got to be wary. Okay. Remember we've got that morning star formation down the bottom. Okay, we've got an impulsive move up. Yes, we've hit some resistance, and then we've come down to the downside here. But if we just show this a bit more aggressive, okay, we've got a decent channel here. So left shoulder, neckline. This is your head down the bottom. So period of consolidation. Breakout lower, impulse break lower, move back up, move inside this neckline, and then a move back down. And if you can notice, right now we're just clipping this this lower trend line. Okay, it's actually coming in at 131.25, and the low of today is 131.31. So I'd be aware or wary of price action today. How today ends up, whether or not we get a spike out of this lower trend line, whether or not she breaks, whether or not she spikes into this lower candle, this lower Ishimoku cloud. If she breaks through the Ishimoku cloud today, then obviously this level here is going to be your next area. So this is today is quite key. A break lower, and we could be forming a bearish head and shoulders. In other words, this would be the neckline. Okay, moves down to that area, which is 129.76. Okay, then a move back up to break down. If she refuses this area here, and we're literally bang on it at the moment, then the next move up is going to be choppy to start with, but then we're going to look for a break of this channel top, which is around 144.67, for an impulse move higher. Let's just break it down into shorter time frames. So we can see here, let's zoom in a bit. Okay, what have we got here? Let's take away that candle formation. And remember, I'm not trying to pick the tops and bottoms again. I'm waiting for confirmation. So I'm just going to lose that. Just going to lose the cloud as well, just so we can see it a little bit better. Okay, so we've got an inside bar. So here you can see an inside bar. Now, an inside bar, as we mentioned before, is a show of investor indecision. Okay, it's neither bearish nor bullish. If she can manage to engulf that inside bar this hour, it looks like she could well do, which is another 23 minutes, then the short-term bias is going to be up. Okay, she really needs to break this candle high to convert or to give the bias, the medium-term bias, back to the upside. You can notice here as well, we've just got 1, 2, 3, 4, 5, so we've just got a bit of a finishing sequence as well, coming down into that channel base. Just have a look at 240, a 4-hour chart. Okay. And again, if you're buying it off the bottom of here, you really would want to be trading in small amounts, because you are catching it falling nice at the moment. Any questions about euro dollar? And I do apologise about the quality of the webinar today. Has anybody got any questions? Is there anybody still there? Thanks, Sam. So no questions. Okay, let's get on the cable. Let's put the cloud back on. See it. Okay, monthly. It's not got to go too far out. Now this is a consolidating triangle formation. Quite a hard formation to trade. The bias is actually to break to the downside, but I don't think it will. And in fact, I'm not even too sure whether or not it's really a triangle formation. A symmetrical triangle formation. I prefer to look at it, and it is all in the eye of the analyst. I think with more sort of looking at that with being an ascending triangle formation, and that those spikes through just showing that there's resistance around this area. So just modify that a bit. Okay, so I think we've got this ascending triangle formation, basically ascending triangle formation. Have a bias to break to the upside. We've got to be wary of this. Okay, there is a fair bit of cloud resistance up here, so I don't think we thought we're going to get a breakout easily. It's going to gyrate around and probably it could even get to the end, you know, up here into sort of 2013, 2014, before you get a decent break in one direction or the other. What we have got, okay, which we can't ignore, is an AMR, which stands for an acute monthly reversal pattern. And here we've got this engulfing candle formation. Okay, so we've spiked, we've got loads of areas of support here, then spike lower, we reject, we rally up, and we make an AMR, acute monthly reversal pattern. An engulfing green, okay, moves up. What's it move up to? Moves up to our first EMA, our trend holder, okay, spikes through, and then we're early in the month at the moment, 6th of March, we're just making, or just trading inside that February bar. Just note the lack of strength in all this trend. If you look to the RSI around 50, it's trading at 47.2. The highest it's traded in the last sort of 6 to 10 months has been 54 and down to 45. So it's really not breaking away. It's showing that there's no clear trend on the monthly. To break it down yet again. Okay, weekly we didn't get the reversal pattern here, but we had that trend line. Okay, this actually flags it up as being a bullish engulfing pattern. It's not for me. Bullish engulfing pattern to me has to take out the whole of the previous candle, and this didn't. Yes, it was a very decent move up, but not enough to excuse me, not enough to warrant a bullish engulfing. So we've moved up. What have we done? We just gyrated in between this crazy zone, if you like, in between the 15 and the 62. Okay, spiking up, spiking down again, spiking up through. Okay, these are support and resistance zones as far as I'm concerned, the 15 and the 62. And at the moment, we're trying to make a break out of literally one way or the other. I've got a bias to break to the upside. I've got an acute monthly reversal candle. It looks to me more bullish than bearish. spikes have been well rejected. There was 3 up weeks, and really not that many down weeks, and even if they weren't very solid. So I've still got that bias going down to the daily. Okay, and again on the daily we get a decent breakout of the cloud. Okay, comes back inside the cloud. It doesn't just retest, but actually comes all the way back in. Here we get a bullish engulfing candle formation that takes us back outside the cloud. Very, very choppy. We get a bit of a move up, but then it comes down to spoof us again, basically. Inside Harmonic, which is investor indecision. A breakout of the high, which is a bullish signal to get up. Then another inside Harmonic, then a breakout of the low, and then a signal to go down. So it really has been, since you've had a breakout of this cloud formation, it's been very messy indeed. But it is in a channel, and if it's inside a channel, you've got to expect price action to be pretty horrendous. Okay, because this is an area of consolidation. So just make this a bit better. Okay, so we've got support down here, all the way down to sort of 156.43. Again, the bias is to the break. This break is to break to the upside. We've tested it twice. So 1, 2. These are the 2 tests of the upper trend line. What would normally happen in most chart formations is that we will get a break on the 4th attempt. This happens in triangles, wedges, and sometimes channels, not so much in channels. But you can see that we've had, this is obviously the first or the start of our channel. This is the first attempt, second attempt, and then the third should be the breakout. But there is scope for further downside pressure. I am a bear on euro sterling, so you know we can see lower euro and sterling strength and still have both of the analytical reports correct. Just breaking this down again. Okay, so we've got this is the 240-minute chart. So remember what we've got on sterling dollar. So we've got that bias on sterling dollar. Oh, sorry, euro dollar. We've got that potential bias. We've got that trend line support. So we've got to be wary of the other dollar pairs. And here we can just see that we're forming an inside bar. Okay, decent move down. Again, let's pull this across a bit. Right, we can put a fib on this one, but I will do. Okay, this is 161, which is 261.8%. So an overshoot, 1, 2, down in 3, move back up in 4, touches the cloud. Actually sold it at 7 o'clock open this morning at 158.55. So I've had a decent run down, and then we're towards again this this area of support, this 261.8% fib. RSI is oversold. Like I said, I'm not too worried about that because you can see here it was oversold for quite some time and the trend still persisted. Until I get reversal patterns, I will stand aside. If I get reversal patterns and the bias is into the upside, I'm not looking to trade it through this cloud or even through the EMAs. What I'm looking to do, I'm looking to take a very wary long trade into this resistance, because until it's broken out of the resistance, the bias is still to the downside. And so these moves back up here and in euro dollar at the moment are counter trending. Okay, it's not until I get out and I'm free and I've got nothing above me that I'm looking to really get involved in the trend. I will take little clips like this this higher up. So cable, euro dollar. Obviously today's a testing day, whether or not we can hold on to that channel support. If we can't, then the bias is going to be bearish. Cable, I'm still above. And there's potential to take it pretty soon. The only thing that would worry me, and I'll be very wary of, is the fact that at the moment we have got a bearish engulfing candle, but it's in the middle of a trend. Okay, chart formations are more powerful at tops and bottoms. So here we've got an inside Arami at the bottom, here an inside Arami at the top, here a bearish engulfing pattern at the top. They're not in the middle of the trend. Okay, and here we've actually got an inside Arami here all the way down at this low back in January. So it is still a powerful chart formation, but not half as powerful as it would have been if it was down near this trend line, or up near the high basically. Any questions? Yes. Sorry, I've been struggling to see the chat as well as the chart. Yes, the clouds are thin. It basically means that there's less support or resistance, less obstacles, if you like, less for the price to push through. Any other questions about cable? So I'm still a dollar bull. No, sorry, a dollar bear. I'm positive in cable. I'm positive in euro dollar. But I need to see some signs of some decent reversal patterns today. Also, let's just go back to the decent spike at 61.8%. Like I said, I wouldn't be selling into it now. I'll be waiting to see what sort of reaction we get off the base here. Just notice again that different time frames it can work quite well. Just notice how that move up clipped the 50 line again before this bearish move down this morning. What other currency pairs would you guys like to look at? I'll try it open. Hopefully Vicky will be able to give us a bit more time or more. Anybody got a particular currency pair that they're looking at the moment? What I have got actually, which I don't look at fundamentals, Solomon. I only ever look at technicals. I'm aware of fundamentals. I have trader talk on, and I listen to what's going on, but I don't trade the news. Hopefully I'm in a position before news stories come out, but I don't trade non-farm payroll. I try to avoid afternoons as much as possible, to be fair. I do start work at 4 o'clock in the morning, analysing currency pairs. So by the time it gets to sort of 1:30, 2 o'clock in the afternoon, I've pretty much had my day, to be honest. I'm just going to show you a New Zealand dollar stock, which is a great one this week. And then we'll have a look at, Aussie dollar. I've just come out of this one as well this morning. But this is what I'd call, when you catch them, these can be your bread and butter. Basically, these are the trades that you can stick into your account and thank your lucky stars. You saw it. This is off that. I thought you were out of line. So basically was lucky enough to spot it, but got in at literally just underneath the high here last week. And going back to fibs, now, the market does work around fibs, and I'm quite fanatical on sort of harmonic patterns as well as everything else. So what you do, you take the first leg, or the first wing, or the first, whatever you want to call it. I mean, they are named after sort of bats and butterflies, so I suppose we should say the first wing. So this left-hand wing, we take the length of that wing, and then you put on a fib extension. So this is 100%. What you want is 127%, 161.8%. I'm just going to do that now. So these aren't my charts, so let's add one in. Got one in there, 1.27. Right. So there, that's what we're looking for. So this is 127%, which is a perfect bearish butterfly formation. Okay, so just to show you how that is formed. So it's a lot of hard work, and a lot of training, and a lot of knowledge, a lot of webinars that you have to sit through to be able to sort of start spotting these different aspects of technical analysis. Now, if you haven't seen this chart formation, if you haven't seen this harmonic pattern, if you're not into harmonic patterns, there are other warning signals up here that could have got you into a very decent trade. First one, we've got a bearish engulfing pattern. Okay, so we've got this bearish engulfing pattern, and again, it won't signal up as a bearish engulfing pattern. That's actually signaling a shooting star. But as far as I'm concerned, as long as it takes out the range of the previous candle, okay, then it's good enough for me. Now, notice how she just clips again the support, the EMA, gives you a chance to get in around this previous area of resistance. Okay, loads of times she spiked up around here, spike. And we know that's an area of resistance. She moves back up. If you miss the entry, okay, that's your chance to get in. The next day is a bearish engulfing pattern. We move down. What do we hit? Okay, 62 EMA on the daily chart, and we're showing support there now. So if we can break that down in short time frames again, do 240. Okay, so this was your aggressive move down. Do you remember what we saw on the daily chart? We saw the 15 EMA coming in. Okay, here we've got thin cloud. So inside Harmonic, just spiking through up and down. Then this is the candle formation that we want to see. We've got an inside doji here, an inside doji bar, investor indecision, and then a decent red, and then we're through. Okay, even if you'd sold it down at this sort of level, there's no reversal patterns all the way down. All we're doing is making lower lows and lower highs. Okay, again it engulfs there, inside bar here, engulfs it again, and then we've just got an inside bar here. So again, interesting how this 1 hour formation is going to go. If she engulfs, then could well get a move back up to this sort of level, which is around 82.75. But this to me now is very bearish. Okay, New Zealand dollar. I'll get rid of that. Let me remove studies to see if I can do more. So fib extension again. So we'll test it to see whereabouts it was. So you got 1, 2. You had a pause here at 161.8%. Okay, and then the move lower. This was actually 261.8%. So There is chance that she could push down a bit more, but I don't think she will. Not with those sort of support levels in the other dollar pairs. But is this long-term bullish or long-term bearish? Well, off the back of that daily chart formation that we've just shown, it's bearish. Okay, and what we should be looking for. I've got to look at all these. Let's get off this one. We should be looking for a move down to between 50 and 61.8% of the whole formation, which is here. Okay, so eventually move down towards 79.16. What I think will happen, we'll bounce off here, we'll move back up, okay, and then we'll move in to the cloud and probably spike through the cloud near the base before the next move up, okay, so down towards this sort of level. So there's going to be a good opportunity to, I wouldn't take the long trade. I'd be more interested in looking at this 15 EMA on the daily, getting down to short time frame and trying to get one to the downside with a much lower risk reward. Plus, this is my bias now. My bias is now down, not up. Okay, let's just move that way. What's the B? Is that the B point of the butterfly? No, I target this. I target this high. This is the signal to get short. So as soon as we get a decent reversal pattern, you see all the way up here, I'm looking for reversal patterns, but there wasn't one. Okay, didn't give a decent signal. When it got up towards that 127.2, I actually broke it all the way down into very, very short time frames, believe it or not, because I was looking to be I had a 30 pip stop loss, and ended up with 230 pips profit, I think. I actually had it into very, very short time frames. It was 5 minutes, believe it or not. It was off the high. I can't remember which one I sold now. I sold here. Okay, so I got a lower high, I got an inside bar, and then I got a break, and I basically put my stop loss up there. I got to the top. If you let it run, there's a potential for, if you believe in the 500 points, or you just want to, you don't think you're going to get much of a bounce, so there's potential for 16 to 1 risk reward there, which is obviously massive. Let's look at Aussie dollar. Just going to open this up a bit. Now, I've been trying to catch the top of this for quite some time, and I have been short from sort of last week, and again I'm out of it this morning, and it was based on basically this area here. So just bring it down. I was looking at this 161.8%. Again, with these harmonic patterns, this wave here is supposed to stop around 161.8%, but it's also supposed to line up with 127.2% up here. So even though it's made a new high, if we can clearly see, perhaps you might not be able to clearly see because I've got that cursor on. It's not letting me into the charts at the moment, which is driving me mental. Let's just break it down a bit. Okay, quarterlies, pretty bullish. That way. But we've got this large bearish engulfing candle, okay, off the top in the quarterly. So we came down, we did a bit of support, was resistance here, then becomes support, so spike through support, and then she's moved back up. Monthlies. Okay. Again, that's not an engulfing pattern. We move back down, and this is quite choppy. Around 161.8%. Just trying to get in on the weekly. Okay. Also be wary of 78.6. I know you think, oh, I've got all these fib levels, and you just pick whichever ones you fancy, or if it stops around it, then, is that good enough? No, it's not. Different patterns are formed around different fibs. Okay. I can't adjust them, sorry, I'm confused there. But looking at it, I'm not sure if this is 78.6, because I said these aren't my charts. But I'd be wary of any three wave pattern that pauses or stalls around 78.6%, because that is your classic Gartley. Okay, and the Gartley dictates a very decent move lower. So you'd have move down, then obviously a higher low here, okay, and then a move up. That's around 161.8%. It's just been gyrating, failing to pierce that fib level for quite some time. And then we've got a decent move lower. Immediate bias. Again, sorry for all that you just can't see now. Well, I can't see because there's just too much on here and I can't even clear it. Tell you what I'm going to do. The fib extension tools aren't working. I have to say that I've looked to get out and look to short a bounce basically. 1, 2 here inside of Rami, alright, we're engulfed, but this is a decent area of support, was resistance. So 1, 2, 3, very small 4, and then down in 5. We would look to get short again around these levels, around 106.50. Okay, well, honestly say that that's the worst webinar I've ever done. So I do apologise. I will talk to Vicky and Maud and try and get this speaker system sorted out on my other PC. And it just leaves me to say good luck with your trading, basically, guys. Any questions before we wrap it up? $40 daily. I'm sure I had daily in there. The most important thing is price action, okay? But you've got to combine it with something else. It's got to be price action around a relevant level, okay? Don't just see an inside bar and then you see a little move up and think, bingo. I mean, because there's a slight rejection of a low. Previous areas of support and resistance are good, but they're there to be broken as well. Hopefully we've got time. That chart there. What the question is? Yes. Yeah, I always wait for candle confirmation. just because it's a higher or low, just because it's 261.8%, invariably it will push through those levels. Euro dollar was at 261.8% last night, but it pushed on the hourly chart, but it pushed through the low and it managed to make a new low. So you can't hang your hat on it. What you can normally hang your hat on is if you get decent reversal candles. I mean, I know a lot of guys that will just purely look at 4-hour reversal candles, and then they'll hunt down to see whether or not that reversal candle was it an area where they expected it to be. Monthly doesn't really show us a lot. We've got a decent reversal candle here, took us up into the cloud, loads of spikes, rejections, whatnot, then a move back down. I analyse dollar CAD for first for trading, and I have found it one of the hardest pairs lately because it's just trying to gyrate around this parity level. And while it's around there, until it makes a really decent breakout, it's you really to try and give it a long-term forecast. It's not impossible. And obviously, with all this talking about fundamentals, and I didn't talk about fundamentals, but with all the worry of Iran and oil prices going through the roof, you can't rely on the dollar bias too much either, because obviously it's a large commodity pair. So we've got a decent move up. This looks very slopey and corrective, and at the moment it's failing to break and close below 61.8%. We had a bearish candle last week, which gave it a bearish engulfing candle, which obviously gave it a bias to the downside. But as I was saying previously, you really want to be seeing these at tops and bottoms, not in the middle of a trend. Obviously, a bearish candle is trying to push it lower. So again, these inside bars, this is in 3. This can be seen down in 3. It's more bullish than bearish to me at the moment, but to get a decent long-term bias on it, I need to get through both of these fibs, these moving averages, which are sitting at 51 at the moment. That's also last week's high, 10051. It's also going to clip this 50 level. So there's a lot of resistance to the upside. You've got to remember we've got the euro bullish bias, or a slight euro bullish bias, with a dollar, which is obviously dollar weakness. So we could, if we get a refusal around this level, then we could quite easily see a move back down towards here, which is 96.57. But at the moment, an inside Harmonic candle being formed this week with 2 days in. There's a lot of support here with a cloud. As I said before, it's a bit, for me, just looking at it as it stands at the moment, it's a bit no man's land, to be honest. And all I'd do, if I did want to get a position on, if I was fanatical about it, I would just use short-term chart formation and just try to look for a bias. Maybe leave some on just in case you get a bit of a bleeding trade, but there are better currency pairs out there to trade at the moment. I'm just going to read these. Thanks, Ian. Appreciate it. You're more than welcome. No webinar for another half an hour. 1:30. Find out. We find fire. We have inside harmonic formation. They can either be reversal or continuation. No problem at all, shit. Was he Kiwi? No, you're desperate now. I don't don't look at it. I look at Euro CAD, Euro Aussie. Euro Knocking is one that you should all start having a focus on, because if before prices do go through the roof, EURUSD is going to be a decent trade. I'd like to find out more how you find a bias when you have an inside Harmonic formation. Yes, you have to wait for confirmation. An inside Harmonic candle is completely the opposite to a bullish engulfing or a bearish engulfing candle. Whereas a bullish or a bearish engulfing candle is a show that the market continued in the original direction, but then completely changed its mind and reversed sentiment. Now you can get that on 5 minutes, you can get it on an hourly candle, you can get it on all sorts of different time frames. The larger the time frame, the more powerful the candle. Okay, so when we're looking at these monthly candle formations, that should give you a long-term bias. You can still trade intraday. You can still look for these little whips lower. You know, as I said, I look for trend, and this here is trend. Okay, you're above the RSI, you're above the cloud. It's bullish, but when you get to an area like this and you're looking at other dollar pairs that are showing signs of exhaustion, and you get an inside Harmonic candle again, then that is it's a warning signal to bulls that this bull trend could be coming to an end. Okay, you basically to trade an inside Harmonic properly, you have to wait for a candle close outside the bullish candle. So here we see the 10 o'clock candle. That's our outside bullish candle that takes over the inside Harmonic candle. And then you need to wait for a close, a firm close, underneath that candle low. So that candle low is at 99.82. We did breach it, but we didn't close below it. Okay, so we're still in this no man's land, if you like, at the moment. Engulfing patterns are far easier, because here you can see we're getting engulfing patterns off the moving average or moving trend support, if you like, much better than a flat line. This actual this moving line that helps us, this moving average. So that's much easier to trade, because as soon as it's engulfed, as soon as it's closed, that is my trigger. You've got a trigger there, you've got a trigger here. These are overnight moves, they're not really, or afternoon moves, so there wasn't really a lot of price action. Okay, so the bias. You're just looking for bullish signals with the bias, basically. Don't overcomplicate things. Okay, we've got to wrap it up now. Thanks for coming. Thanks for bearing with me. Like I said, we'll endeavour to get that sorted out before the next webinar. And I wish you all the very best with your trading. Okay, thanks very much. Bye now.